Hello everyone, I am Adarsh, lecturer in Vidhyaashram PU College, the Temple of Excellence. So we are in the session 5 of accounting ratios. In the previous session, we discussed about what is ratios, types of ratios, as well as few problems on first type of ratio. What is the first type of ratio? That is liquidity ratio. In the liquidity, we have already done problems on current ratio as well as quick ratio. Now we are going for second type, that is solvency ratio. In the solvency ratio, we will work out all 5 types of ratios. The second type of ratio is called as solvency ratio. What is solvency ratio? Solvency ratio means it is only for long term. Anything which is beyond 12 months, we call it as long term. The long term things are any long term receivable or payable, it will be calculated in the solvency ratio. Under solvency ratio, we have 5 sub ratios. Now, what is the first type of ratio? The first type of ratio is called as debt equity ratio. The second type, proprietary ratio, and the third one, debt to capital employed. Debt to capital employed ratio. The fourth one, interest coverage ratio. Interest coverage ratio. And the last one is asset to debt. So we can take it as total asset to debt. These are the sub ratios which comes under solvency ratio. Now, we already done problems on these two, debt equity and proprietary ratio. Now, we will solve problems on debt to capital employed, then interest coverage ratio, and the last part is asset to debt. Debt means long-term loans. Now, in this, what is the formula for debt equity ratio? The formula is very easy. You have to take debt or long-term loans divided by shareholders fund. What is the formula? Long-term loan or debt divided by shareholders fund. Now, what is the second type of ratio? The second type of ratio is called as proprietary ratio. Who are the proprietor? Proprietor means the owners of the company. Now, the formula for proprietary, whatever you have shareholders fund, it will be shareholders fund divided by capital employed. There is a formula for proprietary ratio. What is the formula? Shareholders fund divided by capital employed. Now, third one, debt to capital employed. Easiest formula. Why? Because the formula itself in the question. Now, debt means, always remember, it is long-term loans. Okay, some companies they will go for short-term also. For your examination, you consider only long-term. If you do for short-term, then also you will get complete marks, but better always go with long-term. Now, long-term loans divided by, what is this? Capital employed. It is there in your question itself. These two things will come later. While doing problem, I'll explain you what is this and what is the last one. Now, just you have to remember first 3 formulas. Debt equity ratio formula, debt or long-term loan divided by shareholders fund. Second one, Proprietary ratio, shareholders fund divided by capital employed. And the third one, debt to capital employed. The question itself, we have a formula called long-term loans and capital employed. Clear? So today we are discussing about solvency ratio. Under solvency you have 5 sub ratios. Those 5 sub ratios we will complete today. Debt equity ratio. Now debt equity ratio, what is the formula? Long term debt divided by shareholders fund. Before we'll go to this, we'll go to question. What is your total asset? It is 15 lakh. Current liability is 6 lakh. And your total debenture or total debt is 12 lakh. In this, remember these numbers. Now, for this, what is your total asset? 15 lakh, current liability 6 lakh and debenture 12 lakh. 15 lakh, current liability 6 lakh and your debenture is, your total debenture is 12 lakh. Now, how to calculate this? You know the formula, total debenture divided by shareholders fund. In this we will consider only long term. Now, long term debenture is not given in this question. How to find out? Now, from the total debenture, if you minus current liability, you will get long term debts. From the total, if you minus the current liability, you will get long term debts. Now, your long term debts 12 minus 6. So what is your answer? Your answer is 6 lakh. Now, shareholders fund. What is your shareholders fund? Normally we were calculating shareholder fund as your share capital, profit as well as reserve. But in this, share capital not given, profit not given, as well as reserve also not given. So one more method we have to find out your shareholders fund. To find out shareholders fund, the one more method is your total asset minus total debentures. Remember, if the capital, profit, reserve is not given, you have to go with this one. Your total asset, what is your total asset? 15 lakh. Total debentures, what is your total debenture? 12 lakh. 15 minus 12 lakh, your answer is 3 lakh. There is an alternative or second method of calculating your shareholders fund. For the further calculation, everywhere shareholders fund you have to mention only 3 lakh. Now we'll come to formula. Your long term debt we got 6 lakh. Your shareholders fund we got 3 lakh. What is your answer? 2:1. Your final answer for debt equity ratio is 2:1. As per our previous discussion, your debenture is more, your shareholders fund is less. The company is not in good condition. That's why the debenture is more than your shareholders fund. We'll go for the next slide. Now, compute debt equity ratio and proprietary ratio. Now, in this problem, we have to calculate two things. First one is what? Debt equity, and the second one is proprietary ratio. This kind of problem you will get it for 6 marks because you have to find out what? Only two things. Now, what is the first one? Debt equity. What is the second one? Proprietary ratio. Debt means what? Long-term loan. Equity means what? Yeah, we'll work out that. I'll tell you what is equity. Now, first one, debt equity. What will be the formula? Long-term loan divided by shareholders fund. You have to remember this formula because in examination, debt equity ratio is a compulsory question. Clear? Yeah. Long-term loan divided by shareholders fund. How to calculate long-term loan? Now, so in this you have debenture. What is your long-term loan? You got answer. Your long-term loan is 2 lakh. Clear? Yeah. Next, shareholders fund. For shareholders fund, I told you 3 things are there. Always remember, first one is your capital, share capital, and second one is profit and loss, also we call it as surplus, and the third one is reserve. All put together we call it as shareholders fund. Always remember, shareholder fund means what? One is share capital, second one reserve, and the third one is profit or surplus. Now again come back to your question. Now these 3 things you have to find. Now first one is what? Share capital. You have paid up capital how much? 5 lakh. You got 5 lakh. Now plus another 2 things. One is P&L, other one is what? Reserve. Now in this problem, do you have reserve? The reserve is 0. What is the last one? Profit and loss account. How to find out profit and loss account? In the question, P&L will be given directly. In the question, surplus will be given directly. But in this, they have given net sales. They have given cost of goods sold. Sales minus cost of goods sold is your profit. Clear? Sales minus cost of goods sold is your profit. How much is your sales? 10 lakh. What is your cost? 6 lakh. 10 minus 6. Your surplus is how much? 4 lakh. 5 plus 4 lakh. Your answer is 9 lakh. Any doubt in this? Now, what is your debt equity ratio? Long-term loan divided by shareholders fund. Long-term loan we got it is 2 lakh. Shareholders fund we got it is 9 lakh. Now, so your debt equity over. Again we'll discuss this solution. Just I am giving you brief idea about how to find these things. Now, any doubt in shareholders fund? No. Now, the second one will be proprietary ratio. What is the formula for proprietary ratio? Now, you got long-term loan. How much? 2 lakh. And you got shareholders fund. How much? It is 9 lakh. What is the formula for proprietary ratio? The formula for proprietary ratio is shareholders fund divided by capital employed. This is a formula for proprietary fund. What is the formula? Shareholders fund divided by capital employed. Now, shareholders fund already you calculated how much it is? 9 lakh. Capital employed. Very simple to calculate capital employed. How to calculate means your long-term loan and shareholders fund. Your long-term loan plus shareholders fund is called as capital employed. Again I'll repeat, your long-term loan plus shareholders fund is called as capital employed. Your long-term loan is how much? 2 lakh. Your shareholders fund is how much? 9 lakh. 9 plus 2 how much? 11. So your capital employed is 11 lakh. Clear? Like this you have to find out each and everything. For these 2 formulas we need 3 things. One is long-term loan, second one shareholders fund, and the third one is what? Capital employed. Long-term loan always go with debentures. Shareholders fund, these three things. Capital employed, total of 1 and total of 2 is called as capital employed. Clear? We'll go for the solution. Remember these numbers and calculation, the same thing will be there in your solution. Now, debt equity ratio, you know the formula, long-term debenture divided by shareholders fund. Long-term debenture already given, it is 2 lakh, and your shareholders fund share capital they have given. Profit we calculated 10 minus 6 is equal to 4 lakh. 5 plus 4 how much? 9 lakh. Now your answer 2 lakh divided by 9 lakh, your answer is 0.22 is to 1. This is called your debt equity ratio. Hope you are clear. Proprietary ratio. Proprietary ratio we already calculated. Now, what is the formula? Shareholders fund, it is 9 lakh. Capital employed. Remember, what is your capital employed? Always remember, shareholders fund plus long-term liability is called as capital fund. Now, what is your shareholders fund? It is 9 lakh. What is your long-term debt? It is 2 lakh. 9 plus 2, it is 11 lakh. So, 9 lakh divided by 11 lakh, your answer is 0.82 is to 1. Simple 6 marks problem, but you have to remember what is shareholders fund, what is capital employed, and what is long-term loan. Long-term loan means it is always debenture. Shareholders fund means share capital, profit, and reserve. Capital employed means your long-term loan plus shareholders fund. Yeah. Now, we'll go for the next problem. Following information given by a company from its books of accounts. What you have to prepare now? You have to prepare debt equity ratio. Debt equity easy. Long-term loan divided by shareholders fund. Interest coverage ratio, I will explain you. Debt to capital employed, this also I will explain. First we will do debt equity ratio. What is the formula for debt equity? Long-term loan or long-term debentures divided by shareholders fund. In this, which is long-term loan? Yes, debenture is called as long-term loan. Now, which is shareholders fund? Shareholders fund they have given directly, it is 4 lakh. Your long-term loan is 3 lakh and shareholders fund is 4 lakh. Always remember, your long-term loan should be less than shareholders fund. Then the company is in good condition. It is in good terms. Always, because loans it is from outsiders. Shareholders fund means they are the owners of the company. Now, always debt equity ratio, it should be lesser than your shareholders fund. Clear? We'll go for the solution. Now, debt equity ratio, you got 3 lakh, you got 4 lakh, your answer is how much? 0.75 is to 1. This is called your debt equity ratio. Now, we'll go for the second one. Interest coverage ratio. I told you in the question how to identify, I'll explain you. Now, interest coverage ratio. First, remember what is the formula? The formula is profit before interest and tax. Remember, two things are there, divided by interest on long-term loans. So this is a formula. After writing formula, we have to identify what is this and what is this. Now, first we'll find out this interest on loans. Now, you have 13% debentures. How much is your loan? 3 lakh. 3 lakh multiplied with 13%. So it will be around 39,000. So this is your interest. Very simple. Percentage will be given, amount will be given, multiply and write. Now you got interest is 39,000. Now you have to find out profit before interest and tax. Simple. Now is there anywhere given? Yeah, net profit before tax. But the question is what? Net profit before interest and tax. Tax is added, but interest not added. Now, what is your profit? 3,51,000. In this, interest is missing. In this, interest is missing. Now, 3,51,000 plus what is your interest? 39,000. So how much you will get? You will get 3,90,000. So you got answer of this and answer of this. Both you got. Now it is very simple. Interest you got 39,000 and what is your profit before interest and tax? It is 3,90,000. This much only your answer. Easy or very easy. Okay. Now you have to find out what is your interest and you have to find out what is profit before interest and tax. In case in the question paper, in the question they have given net profit before tax and interest, then this add of 39,000 not required because already included. But in this the interest is missing, so we taken into consideration. Okay. Yeah. See your answer. We already calculated it is 39,000. They have taken 39. Next, net profit before interest and tax. It was given only before tax. Interest was missing. Now we have taken. Now 3,51,000 plus 39. Your answer is 3,90,000. 3,90,000 divided by 39 is your answer. So your answer is what? 10 divided by 1. Remember, this ratio we call in terms of times, not in ratio. So it is in times of 10 times, means your interest compared to your profit is 10 times. Okay. So out of comparing with your profit, whatever interest you are paying to the outsiders, it is 10 times. Clear? Yeah. So this is all about your interest coverage ratio. The last part is debt to capital employed. Now it is very simple. Formula is in the question itself. Long-term debt divided by capital employed. Long-term debt means what? We'll go back to your question. In the question, so what is the formula was there? The formula was debt divided by capital employed. Debt, you know, your debenture is called as debt. How much is your debt? 3 lakh. Now, capital employed, I told you easy formula. Your shareholders fund plus debenture is called as capital employed. Your shareholders fund how much? 4 lakh. Your debenture how much? 3. 4 plus 3 it is 7 lakh. So your answer is debenture is 3 and your capital employed is 7. We'll go to answer. So long-term debentures, as I told you, it is 3 lakh given directly in the questions. Whatever we are practicing now, same kind of questions you will get in your examination. It won't be difficult. Whatever we are discussing in today's session, same kind of problems you will get on following ratios. Now, capital employed, as I told you, your shareholders fund plus long term. So what is your answer? 3 lakh divided by 7 lakh, your answer is 0.43 is to 1. This is called debt to capital employed ratio. What is capital employed? Your overall investments, your overall the owner's fund as well as you're taken from outsiders. Whatever you have invested, what is the total capital plus loan? Out of that, how much is your outsiders fund? I'll give you a simple example. Your total investment is 100. In this 100, including outsiders investment also there, including the loan taken, there is also there. In this, how much out of 100, how much you are taken from outsiders? It may be 25. So this is only a long-term debenture divided by capital employed. This 25 included in this, but we need how much percentage, how much in ratios. For that reason, we are calculating this. What is the ratio called? Debt to capital employed. Long-term debt divided by capital employed. The last problem of this session, the last problem is about you have to calculate debt to equity, debt to capital employed, total asset to debt ratio. These two already we calculated and there is a new thing. Now, debt equity, what is the formula? Debt divided by shareholders fund. In this problem, what is the debt? They have given total debt. We don't want total debt. We want only long-term debts. Now, in this, out of 12, current liability means we call it as short-term. Current liability means short-term. Now, out of total debts, if you minus short-term, you will get long-term as 6 lakh. Clear? Yeah. Out of 12 lakh, if you minus short-term, you will get 6 lakh as long-term debt. As per your formula, your long-term debt 6 lakh. Shareholders fund, have they given shareholders fund in this? No. We will calculate. Debt to capital employed ratio. Debt to capital employed ratio, you know the formula. Long-term debt divided by capital employed. Now, long-term debt we already calculated in the previous one. Now, what is your long-term debt? It is 6 lakh. How you got 6 lakh? Total debt is 12 minus current. So, it will be 6 lakh divided by capital employed. We already calculated capital employed. What is the capital employed? Yeah, your long-term debt plus your shareholders fund. We call it as capital employed. Your capital employed is 9 lakh. 6 lakh divided by 9 lakh, your answer is 0.67 divided by 1. 0.67 is to 1. We call it as debt to capital employed ratio. Now, we have a note for this. Debt to capital employed ratio can also be calculated with reference to total debt to total asset. I already explained you in the previous slide. The last part is called as total asset to debt ratio. What is the formula for that? The formula is total asset divided by long-term debt. Now, what is your total asset? Your total asset is 15 lakh. It is given in the question itself. Divided by long-term debt. Your long-term debt is how much? 6 lakh. 15 divided by 6 lakh. Your answer is 0.25 is to 1. Now, again come back to this one. So you have alternative option. What is the option means? Few companies they go for only long term. But some companies they will go for long term as well as short term, means total loans. Now, in the question they have given what is your total loan or total liability? Your total liability is 12 lakh. In this we have taken only long term, but in this we have taken long term as well as short term. In your examination you should do only this one. Just for the clarification purpose, I have done one more on long term as well as short term also. If you are taken total means it will be 12 lakh and your answer is 1.25:1. So don't go for any confusions. For your examination only this much sufficient. They will not ask you for overall. They will ask you only for long term. If they ask you what is total asset to debt ratio, what is your formula? Total asset divided by long term debts. What is your total asset given in the question? 15 lakh. What is your long term debt given in the question? 6 lakh. 15 divided by 6, your answer is 0.25:1. This is not required, just alternative method I have done in this. Okay, yeah. So these are all about solvency ratio. Solvency means long term. In the solvency ratio we discussed 5 things. One is debt equity ratio. So if I say 1:1 ratio, you have to recall all the formulas. Now first one is what? Debt equity ratio. What is the formula? Long term debenture divided by shareholders fund. Second one, proprietary ratio. What is the formula? The formula is shareholders fund divided by capital employed. And the third one is what? The third one is your capital or debt to capital employed ratio, means total debt divided by capital employed. Total debt means long term. Okay, this one. And fourth and fifth. Fourth one is what? Your interest coverage ratio. What is the formula for interest coverage ratio? The formula is net profit before interest and tax divided by interest on debentures. And the last part is just we discussed about asset to debenture. In that, what will be your formula? Just now we discussed. The formula is very simple. Total asset divided by long term debenture. So these are the 5 things which comes under solvency ratio. Very important for your examination concern. On this you may get 12 marks problem. They will give you 3 or 4 ratios. On that each ratio will carry 2 or 3 marks. Sometimes if they give 3 ratios, each carries 4 marks. So you have to remember formula and you have to be familiar with how to take. What is the long term? What is your capital employed? You have to focus on those things. Thank you.